Hey everybody, this is Jenelle with Waypointe Realty, and I have a very special guest with me today that you may recognize from past videos. I have a Rayce Robinson from Mid-Florida Mortgage with me. So hey Rayce, thanks so much for joining.
My pleasure.
So on this webisode of our series, Real Answers to Real Questions in Real Estate by Experts, we're going to be discussing how to improve your credit score.
Now, it's 11 o'clock.
Guys, it's 11 o'clock. So,
in case you want to know.
Every time, man, my computer does this every hour on the hour on purpose. I like that. So your credit score is one of the main factors for purchasing a home. I can't tell you how many requests we've had recently for people interested in purchasing, but they have a credit score below 600. So how do we get this credit score up? We're going to be doing a few questions that we've been asked and presenting this over to Rayce, who is a mortgage expert, to make sure that we can get the right answers to your questions. So Rayce, when people are looking to purchase a home, they start realizing what an important role credit plays in getting pre-approved. So when they do have low credit scores, what is one way they can start getting those scores up? Because we know that not all of them will qualify below a 600. So what are things that you recommend to start them on the path and trajectory towards getting that credit score up?
So that's obviously the most asked question. And usually, as you know, people often wait till the last minute. They see a house they love, and then they're like, hey, let's go get pre-approved for a mortgage. So one is time. Unfortunately, with credit, there are some things we're going to talk about in this video that are quicker than others, but really it does take time. So if you look at the way that credit breaks down, the way that the credit bureaus look at credit, they look at payment history as 35% of your credit score. So really that is not anything that you can do except have the payment history over time. So that's one, but it's a big chunk. Credit utilization, which is the one that we'll talk about, where we do manipulate, especially often during the loan process and stuff like that. And that's their available credit and those kinds of things. Length of credit history, meaning if someone's 18 years old, they're not going to probably have the same credit as someone that's 50. And there's little things like new credit and credit mix. So credit utilization and not being maxed out are probably the big ones that I see that people can manipulate. And so a lot of times when if you refer to me or an agent sends me someone and I'm looking at their credit, usually the first thing I'm looking at is overall credit utilization and are they maxed out? Meaning on any given card, if they owe more than 50% of the available balance, they're starting to get a negative rating. If you're over 75, and many people don't realize they're over 100%, because if you're maxed out on the card, they roll that interest on the top of that payment. So if you have a $5,000 balance, now it's $5,050, right? And then you're paying that $50. So paying credit cards down is probably the easiest and quickest way to get someone's score up if they haven't lived a lot of time to do that.
So you mentioned something that I've heard recommended as well from our buyers. They're like, listen, I have to wait to pay off my car, or I have to wait, I'm going to try to sell my car so that I can get that off. It's interesting that you're talking about your revolving credit and capping out from your credit score, because that actually also affects the mortgage for the debt to income ratio. So they kind of work hand in hand, right?
Yeah, and it is a dance with most people because, right, they have a limited amount of money. Most people are normal people, and they're working with X amount of cash. So I'm trying to figure out how to leave them enough cash to buy the house and then pay the credit card down. And then of course there's debt ratios where sometimes they maybe have to pay something off, which is different than maybe the credit report, but it's all part of that pre-approval process. So yeah, it's all one giant conversation on what someone needs to do.
Absolutely. So I know that you've worked wonders, because typically we tell people 640 is a safer place to be because of FHA and all of those other loans that qualify at least for a 640. But you've closed as low as, you said, 580?
560, really. So it's possible. So what I tell people with lending is think of it as a box. So there's a box that most banks lend in. And it doesn't really matter whether you're talking to me or any other bank, Fannie Mae, Freddie Mac, FHA, they've all got kind of their guidelines of what they're looking for.
Right.
When you get outside of that box, meaning lower credit scores, or maybe they haven't been self-employed long enough, or the things that aren't normal, but in this case, let's talk about score, then there's going to be other factors that are going to come into play, meaning if you have a 5, 670 credit score.
Right.
It's going to be difficult to do because now you need a lot of reserves. Now you can't be getting gift funds. A lot of the things that you can do on a normal transaction, those are going to be wiped out. So I say that we do it, and I see people advertising it online. I would say it's more of a lost leader to get people to call. Maybe one out of 30 or 40 people meet those guidelines where they can do a really low score like that. So I really try to get people 620 and higher. To me, that's kind of the target.
So, I mean, that's a great point, because really, if you're going to have credit score, it's because something happened in your life, but you have the funds to be able to purchase a home. So that's when I think the 580 is probably more, or 560 is more appropriate. Is that right? Like, they have to have at least the money to be able to put down.
Yeah, and they're really looking at the last 12 or 24 months. So, people went through a bad time economically, which happens, right now. People are going, there's things that they'll look at, but if you've straightened up your credit for 12 or 24 months, so this particular person that I'm thinking of had a score closer to 560-ish, but the last 24 months, they had no late payments. And so we could kind of hang our hat on, here's what happened, because we're really building a story for someone with lower credit on why is this person with lower credit financeable? They got assets, and all these things that we're looking at.
It's interesting you say that, because really, your credit score actually paints a picture of who you are, or the decisions you've made, or responsibility, etc., and even things that have happened in your life truly affect your credit score story, so to speak, because you guys basically can paint a picture of the type of buyer. I mean, the reason why the credit score is so important is because it really shows how risky this buyer potentially is. Is that right?
Yeah, I mean, think about it. Credit, down payment, and debt ratios are the big three, and then credit, the big one, determining so many of those factors. How high of a debt ratio will the lender go? What kind of rate you're going to get? Those kinds of things. Yeah, it's the big one of the three for sure.
Absolutely. So bankruptcy, short sale, foreclosure, if people have experienced these, which has happened in the past, how long before a bankruptcy, I know it's 7 years or even 15, depending on the bankruptcy filed, like before it comes off, but how is that going to affect their credit to be able to purchase a home, and how long would they have to wait after a short sale or bankruptcy or foreclosure?
That's a great question. It does get complicated. I did a video on that once because FHA has a different guideline than VA and Fannie Mae. And so, but in general, most people are going to be waiting about 4 years to do some kind of conventional loan on average if they do a bankruptcy. And then on FHA, it's going to be 2 or 3 years, probably usually 3, before they can look at it. Now, what you bring up is a great point. Sometimes people get past, say, the 3 years to where they could maybe go FHA again, but they haven't done enough to bump their score up in the meantime. So even though we get past that 3 years, you really have to work hard after something like that happens in the past to get your score up, because that's automatically bringing your score much, much lower. I don't know the exact number, but my guess is if you don't do anything, you're in the 500s right after you do a bankruptcy or foreclosure or something like that. So you really are starting from there, trying to get up. And I've seen people with a BK, the scores back over 700 by doing some of the right things.
So where does the credit score number start? So if you end up in 500 after a bankruptcy, does it start at 500?
No, in fact, so it's down to, I think the actual numbers are 350 to 850. Really, most people though, I would say 95% of people are going to fall between 500 and like 770. So, I mean, the people, I haven't seen too many people below 500. And if to get over 800, we see a couple, but like you're a way overachiever. There are some people out there.
So what is a good credit score to aim for realistically if people are under 600? Like, what's something good that you're like, all right, once you hit this point, this is going to be much smoother sailing. But at, under 600, this is going to be really rocky territory.
I mean, 600 is a good number, and 620 is for a Fannie Mae loan or conventional loan, which is, what a lot of people do. You have to be 620 or higher to even consider a conventional loan. Truthfully, if you're a 620 score, you're probably going FHA anyways, because of Fannie Mae has a big, big overlay on interest rates where FHA doesn't, which is a really cool part, when you can take someone with a 620 score and give them a fairly competitive rate, where they're going conventional and they're looking at the rate going, wow. And that's because Fannie Mae overlays their pricing to any bank that we work with and really bumps up that score or bumps up that rate with a low credit score.
Okay, so good to know. So 620. Now I've heard, now this is going to be on our next session where we're going to talk about real estate myths that are happening right now, but is it true that they are going to be raising the minimum score to 680 or 675, I think it was? Do you know anything about that?
Yeah, so lenders, and if people follow the news, they've been calling it the mortgage crisis, which I think is more of a headline grabber.
Right.
But there are some liquidity issues in the back end of these markets, meaning when you pay your mortgage payment, often you're paying that to a servicer, and that servicer's paying to the people that own the asset. Well, even though all these people on record forbearance are not paying anymore legally, right? The government's basically said as part of the CARES Act, but they're paying, they're still having to pay, the servicers still having to pay. So it's creating liquidity in the market. So I would say, no, you can still do a low credit score, but it is taking more time up front to really have somebody look at your situation and make sure they really have a good picture of where you're at and put you with the right lender, because not some lenders are going, like Chase just announced, they're only doing 700 scores and higher.
Right.
So there are some banks that are doing that for sure.
So how long would it take to increase a credit score for just 50 points if they listen to the basic things of paying down your credit card, not maxing out on your credit debt? How long would it take to just increase maybe 50 points on average?
So it's always a time, versus what you can accomplish ratio. So, a lot of times, unfortunately, when I get someone, it's pretty quick, meaning they've talked to you and they're like, hey, we want to buy a house. Of course, we want to get them now while rates are good and before prices move up. So normally we're looking at paying down debt and things like that. That can happen really quick. We can even do rapid rescores where I can literally have someone pay their debt down today and do a rapid rescore tomorrow, and within 3 to 4 days have an updated credit score, and that could easily be, in some cases, 50 points.
Wow. Okay.
So, yeah. Now, ideally, what you're saying is correct. You really would want to reach out earlier, because if you have more time, there's more things that you can do that are going to maybe have a bigger impact. But probably most of the time, what I'm dealing with, just because of the time frame, is paying debt off. It's typically what we're doing.
Now, this is actually really good news for people who do have lower credit scores but want to try to get their credit score up and buy now while the interest rates are really, really good. Because we know that the interest rates are going to go up. It just is one of those things that keeps being talked about and mentioned in the news consistently. And so we try to tell people, you buy a $250,000 house now at a 3.5–4% interest rate, it's going to be, you're going to get a lot more bang for your buck than if you try to, buy a house for $250,000 or, at a 5 or 6% rate. You may end up getting a $225,000 home for the same thing you got $250,000 and pay the same thing, based on the credit score. Based on your interest rate. So question, does your credit score have any effect on the interest rate a buyer can secure?
Yeah, it has a big effect, I would say. So again, FHA has the least effect. Fannie Mae conventional loans has a huge effect. So even if, I've had people putting 30% down, which is a pretty big down payment, and still getting a rate 0.5 to 1% above the market because of the overlays. Fannie Mae basically has about 8 tiers, all the way from 620 to 740. So depending on where you fall at in that tier, as a broker, I work with lots of different banks. The banks all across the board have to take those same overlays to be able to get the pricing. So for most people, it's going to impact their rate that they're getting, and that's going to impact how high they qualify up to, how much buying power that they have.
Yeah, absolutely. And that's a great point. I know some of the questions that I've seen in the past are, as agents seeing properties fall through, like listing agents seeing their listings fall through because the buyer wasn't pre-approved prior to. Now, we don't have that issue because when we list our properties, any offer that comes in, we vet through the lender that they've selected. And we do the reverse as well. We won't work with any buyers until they've been pre-approved for 2 reasons. We don't want to waste their time, and we don't want them to get excited about a property that they can't afford. And if they're not ready, willing to put in an offer, there's no reason in looking at homes, because it's not going to be available by the time they are ready. So we want to make sure that people are successful in their home search up front. So when people have a low credit score and we send them over to you, when we get that response, how soon can you get a pre-approval back?
It's going to depend on their situation, and that's where having good communication, because, a question I was thinking of for you when you were talking is, do you have people that actually have pre-approval letters that seem like they're ready to go, where you find out they weren't pre-approved, or they weren't really ready to go, or they really just didn't know what they should know to be out there looking for a house? Do you run into that, working with buyers?
Not necessarily. When we work with buyers, remember, and our process, in our consultation, we make sure that they have a pre-approval before we go. We don't do pre-qualification. We want pre-approvals, because if they love the house, we want to make sure that we can move on it right away without any hindrance. Now, I'll tell you, on a listing side, when we've listed houses and had multiple offers, we call every lender, and we make sure that we are vetting the lender, and we're asking specific questions without going into information or questions we're not legally allowed to ask. But we do ask them, how qualified are they? How sure do they think this is going to close? And we've got information that literally has swayed us from one buyer to another because of their lender, and gotten the deal closed, and the seller's happy as all get out because we vetted them. We made sure that they were qualified, because the last thing we want is to have done that and not gotten the right answer, or not vetted them, accepted this offer, and then all of a sudden now they can't get financed because it was a few points off, or they made a purchase that threw all of their numbers, and now they can't qualify for a house. So we do. But talk about some of those things, because it's happened only once in 9 years to me, and won't happen again, but at least not as much as I can help it. But people making a purchase before closing that skews their numbers just enough, where now their credit score and their debt to income ratio is just off enough that now they can't qualify for a loan. Can you talk a little bit about that?
Yeah, people do, most people they understand they're going through a loan process and not to do certain things. But over the 18 years, I've seen a guy buy a car in the middle of the transaction, which, I was really nice to him. And I'm like, I hope you like sleeping in the car, because that really messed your debt ratio up. So I think, I've seen people put their name on a website and get like 100 credit pulls all of a sudden, that, because they basically offered their information online. And there's even banks out there that are doing total online pre-approval letters. I'm not going to mention who they are, but if you think about it, how much time, like we spend with people to make sure they're ready to go.
Right.
And if you can just type your name and number, and they can pull your credit automated and give you a pre-approval letter, it's not doing that client a service either, because if it doesn't work out, it's usually the client that loses. They spend money on an appraisal, they spend money on an inspection, they have an escrow deposit put up. And so, they really want someone to take that time and to be honest with them. You've had this conversation. I had someone that's super excited to buy a house, and they're ready to put an offer in tomorrow. And I look at them and like, it's going to be 30 or 60 days, because we need to do these things to make sure you're successful as a buyer. Last thing I want you to just go out there, spend all this money, and not become a successful homeowner. So some of it's just being honest with people and letting them know kind of exactly where they're at, have a very clear plan on what they need to do, whether it's paying off debt or whatever the situation is, and then communicating with the agent, so that they're also really having everyone all on the same page. Makes it really, really well when you're out there putting offers in, and exactly where that buyer's at, as far as, do they need help with closing costs, or how much time do we need to close this particular buyer, things that you need to know.
All great points. There's just so many little things that people can do to help improve their credit, especially starting to get out of debt. I think getting them connected to a lender right away. That's something that we do, is that we say, listen, we need you to contact Rayce immediately, so that we can get you on a game plan. Because if we can't get you in time for this lease, we definitely want to get you in a property before you have to renew your lease next year. And we are okay with putting people on a hold in order to get their credit score up, because it's going to save them more money the better their credit score is. So we want to make sure that we have a good plan of action for them and that they feel comfortable and ready and know exactly what to do with their credit score and with their debt. Is there any other advice that you have for people as we're wrapping this up? What other tips would you have for people that are ready to buy a house, but their credit score is between 540 and 580? What would you recommend?
I would say so. Two things come to mind. One, be careful of the mortgage myths out there. I mean, we're in the YouTube generation. I do videos. I know you do too.
Yeah.
But there is a lot of bad information out there. And so I see people doing things that are really old school, disputing trade lines, adding authorized user accounts.
Yeah.
And there are certain things that may pull your score up, but lenders are aware of what you're doing, and we have to undo a lot of that and actually delay. So, now I will say, if you have really bad credit meaning, you know that you've got late payments and all these things, sometimes you just have to bite the bullet and hire a credit repair company, because lenders are not credit repair.
Right.
We know a lot about credit from looking at it, but there are some sophisticated things that somebody that works with credit all the time can do. They can dispute things and then remove those disputes, and they know what they have, where to start and where to end up. And so I do sometimes look at a client and say, look, I don't have the skill set. I'm not credit repair, but I can help you become a home buyer. And, just like you have lender contacts, I have people that I trust that I might say, hey, get anything with this, but here's someone you could contact that at least could talk to you about that, where you could hire an expert to do that. So one, I would say be careful of the myths out there. People do these quick fixes and often they end up hurting themselves. And then the second thing is just, you can get a free credit report. Remember, my score is going to be different, and that's the most frustrating thing, I think. People literally came from a car lot with their credit report, and I pulled it and got a different score, and they're, like, how is that? And I'm like, different industries have different models. So really, if you're going to get a mortgage, you want to have a mortgage company pull your credit, and that's, who you want guiding you through the process of what to do and not to do on your credit.
Great point. I mean, everything you just said there is really important. I think my best plan of attack is send them over to you, and you can let them know what the next steps are and whether or not they do need a credit repair company, because not every credit repair company is going to be a good one. Some of them may do like what you said. They'll basically slap a Band-Aid on there, and a lender's going to pick that up and say, I'm so sorry, this is not going to work. We're seeing that this is either fraudulent, or this just you kind of put a Band-Aid on there just to kind of wipe it away, but we see it clear as day. And so you're not going to be able to pull that wool over our eyes kind of thing. So I think that that's usually the best thing. I mean, I personally, as a real estate professional, would say we need to contact a lender right now. We need to see where your credit score is with a soft pull and see what can we do. And if we need to take an in-depth look, then go from there. And then those next steps will determine whether or not we're going to be able to start the shopping. We can't shop for a home if we don't know what number.
And don't wait. I think you and I both would agree with this, that if you're 6 months out, go ahead and call now. Look,
Absolutely.
We would rather talk to someone up front than one just, even if they have an 800 credit score, sometimes it's good for me just to look.
Yeah.
Pulling your credit has no effect. You only have one reason to have a credit report, and that's for somebody to pull it. In 18 years, I've never pulled someone's credit and had any negative effect on them getting a loan. So whether you have an 800 credit score, a 500 credit score, the sooner out you look, because there are discrepancies that do show up on a credit report, or things that are fixable, but only with time. So my thought is, the second you start thinking, hey, we're going to buy a house this summer, next summer, then you should look, because I don't mind, like you, working with someone 8 months out.
Absolutely.
And putting them on the steps to success.
Yeah, and I love that point. And I'm going to emphasize that again. You pulling their credit score is not going to ding their credit, that it's going to hurt them. You're literally just looking at what they have. How long does that stay open when you do a credit pull?
Usually it's 120 days.
Okay.
And there's a bunch of weird rules with, like, you can actually have other lenders pull it and it won't count as an inquiry. A lot of lenders will try to scare you and say, now that I pulled your credit, don't let anyone else pull it.
Right.
I mean, we have no lender fees. We don't charge application fees. We try to earn your business every step of the way. We never hold you hostage, and no lender should do that. So don't be scared. If you have an 800 credit score and you've talked to a bank and you want to talk to me, or someone's talked to me and they want to talk to someone else, there is no issue with you getting your score pulled responsibly because
Correct.
that is the only reason you actually have a credit score, is to go out and get credit.
That's it. That's the only reason you need it. So thank you so much, Rayce. This was wonderful. I know that we're almost at 25 minutes, but I mean, this is a conversation that is very important, and I cannot emphasize how much we're talking about this right now. We have a lot of buyers that unfortunately their credit score is just not where it needs to be. But at this point, just talking to you can get them on a really good plan to get them to even purchase by the, in a few months or even by the end of this year. So thank you so much for your time. Guys, if you guys have any questions, you can feel free to contact us directly on Facebook. You can find Rayce. We're going to have their information here tagged as well. But you can reach Rayce directly at, what is the website, the best website for you?
Just go to racerobinson.com and I have everything on there.
Awesome.
And Rayce is R-A-Y-C-E.
Yes, that's right. R-A-Y-C-E. And you guys can visit us at waypointrealty.com. We have a great page that you're going to be able to find on our homepage that is frequently asked questions for home buyers. We have 24, 25 questions that are the top questions asked by first-time home buyers, but it's great for anybody. And some of these credit questions are answered there as well. So thank you guys so much for tuning in, and we hope that you guys have learned something. Take care.